Guys, what's up? So I have my video up. I had it before, but it did not record because I forgot to press the record button. So yeah, I'm gonna have to say everything over again. So on the 4 hour time frame is basically the time frame that I use for my long-term structure. And when I zoom all the way out, it allows me to see most relevant pieces of market structure that maintain the trend. So clearly you can see that the trend is bullish when I zoom all the way out in the 4 hour time frame. And why? Because it's obvious, right? It's going upward. Why is it going upward? We want to actually pay attention to the highs and lows that make that give the chart the look of it being bullish, right? So we know bullish is when it's going up and down, bearish is down. The reason it's going up is because there are four pieces of market structure that's maintaining and creating this whole trend. So that is our current high, our current low, our current previous low, our current high, and so in total we have four pieces of market structure. So if you notice, we had the market tap down into demand, previous demand, and once it tapped down to previous demand, it then the whole trend reversed on a smaller time frame. So on a higher time frame on the 4 hour chart, if you zoom out, and the reason we zoom out again is because when you zoom out, you can see the most relevant pieces of structure that maintain the trend. And not only that, when you zoom out, you got to turn and drag price action all the way to the left side of your screen so you can see the current trend. Because if you have it in the middle, you're trying to look at all this irrelevant price action that's all the way in the past, right? So on the 4 hour, we can see that there is current demand with gold, because gold right now went from being at a low to having all this blue price action, which stands for demand on my charts. And that blue price action actually disrupted the short-term trend here, where I'm drawing the blue arrow, where I'm dragging it. This was the short-term previous trend, because on the smaller time frame, it was bearish, and we went from being bearish on gold to tapping into a higher time frame demand zone, or fair value gap, as you will. And from that point, price action reversed from going into a downtrend to an uptrend because this specific area where I'm pointing to shows that price came in blasted upward, taking out two important previous highs that maintained the bearish trend here, which were here and here, right? So these two spots right here are where the trend was disrupted, because price action came and took out both of those two structures, or your change of character. When you hear people talk about chalk or change of character, that just means that the market's character of its trend is changing. So the character of it being bearish is changing to the character of being bullish. So now we know what the trend is. So now it comes down to finding our entry. So the first thing you want to do is, I go on a 3-minute chart for gold, because gold moves it moves fast but slow at the same time. Using 1 hour structure on gold isn't really, I mean, I use it for breakouts, but I use the 3-minute because most of gold's movement it happens on a lower time frame, and then you end up missing what happened on gold because you're waiting for a higher time frame area to get filled or get tapped in that never is going to get tapped in, because gold moves fast, because gold likes to range. Gold will just go straight up, down, and that's why we trade on the 3-minute, so we don't miss out on entries. So on the 3-minute, trend's bullish, and the structure that's maintaining, or the highs and lows that's maintaining the bullish trend of this is R here. Let's circle them. I'm going to circle them right now, right? So you see the chart, right? I'm about to circle the highs and lows that maintain this trend. So that's a high, that's a low, that's a high, previous high, and this is a previous low. So in total, we have four pieces. And usually I draw up to 4, because that's all I usually need to see the trend. I'll draw more, but you can see here, okay, bullish. And if market right now in gold is bearish, that means that the price will come down and disrupt the trend and the reason why I say disrupt is because if price, instead of going up, comes down and breaks and takes out two of these previous, or current, as you will, lows, then that means that smart money is changing direction. So there's supply. That means supply exceeds demand, and in the result, the trend of the market is shifting. But we don't know that yet until the market actually continues to go downward with unhealthy price action. Healthy price action is when price action goes up, down, up, down. Unhealthy price action is when the market has so much volume and so much activity, the market will just go straight up. The cool thing about that is people will tend to get scared of that, but after every volume event or news event in the market or in the economy, the market will always retrace itself after that demand or that expansion. So if you're a supply and demand trader or a fair value gap trader, you make money when the market expands. When it expands, fair value gaps are created and supply and demand zones are created. So yeah, guys, this was a short video. I like to keep things simple. I know it was really simple, and some things that I said in the video you kind of knew already, but this is how I teach. This is more for like beginner, also a little bit experienced traders. So if you're a know-it-all, this is not for you. If you're someone that's still learning, this is for you. So the best way you can learn and help with your trading is to not overload your brain. Take a little bit per day and stop and actually digest the information. And yeah, guys, I hope this video was helpful. Actually, you know what? I might make it a little bit longer. Yeah. So that's pretty much. Let's just go over what I did. So the first thing I always do is I do the long-term and short-term trend on gold. The long-term trend I do on the 4-hour, the short-term trend 1 hour to 3 minute, and I zoom all the way out first. And once I zoom all the way out, I drag price action to the left, and then I zoom back in. And then I identify the current highs and lows that maintain the shape of it looking like it's going up or looking like it's going down. So if the trend is bullish, what makes it look bullish? What are the highs and lows that created the bullish trend in the first place? So yeah, it's really just about doing that. And once you do that, and you see that, okay, well, on the 4-hour, the trend is bullish, but when exactly do I get in? Well, you don't want to get in on the 4-hour, of course. You want to wait until you see demand on the smaller time frame, and then you can check the 4-hour, and you can clearly see, like, oh, okay, the 4-hour, for example, on gold, before this blue demand, we had this up move or that expansion upwards. The market was at a low point, right? And so when the market was in that low point, I wouldn't buy just at any low point. You need confirmation to buy at the low point. You don't just see a market go down and press buy, right? You need to see clear demand, then buy. So that clear demand is basically would be the market expanding due to volume, and then it pulling back to your demand or supply zones. And yeah, guys, that's all I have for today for this video. I hope you guys got value. Peace.